Good morning. We start off again slowly. Yesterday was slow. Inside day, as you can see on the futures here. And what we've got going on here, what has been going on, other than the initial move off the low, is what we call a self-correcting uptrend. And I personally hate them, meaning they just constantly keep you somewhat second guessing as to the ability to keep going, but they do. Uh, they're denoted by deep pullbacks back down to major support, lower highs. They marginally break lows and they come right back again. And this was that bullish pattern that we spoke about a week or so ago. I explained the sideways price movement at that resistance, and it did result in a move up, and we're back to sideways. But you can see the buying on the dip. Nonetheless, it dips down and bottoming tail, and yesterday was the same, but it couldn't take out the high. And here overnight, we get above the highs and pulling back in here. So now question becomes, what was resistance? Does it become support? Basic stuff. As it pulls back into this area there. Do buyers want to step up here and then push up to the next whole number at 3,100? We kind of touched on this yesterday. I was asked, do I think it will get there? And I said, well, it better, because this is a bullish pattern, and this push above the highs is bullish. It cleared the 200 MA and it's going sideways, and buyers on the dip. And if it doesn't get there, something's wrong. So as we do every day, we go to the prior day's low as our first reference point of support. And, as long as it can stay above there, and it can dip and come back, but we want to see it close above there. But the deeper it pulls back into the prior day's range, the more in question it becomes. So just generally, look, as you go sideways, it's a resting period. Consolidations at resistance are bullish. Breakouts above resistance are bullish. And so that guides us with an expectation that prices should go higher to the next reference point. And as that occurs, we just go into our factory work. So now we've got the major support here. We've got minor support here. This bottoming tail bar is going to be major support on a lower time frame. Right? So step by step, as much as I don't like the grind, there's actually nothing I can do about it but to either sit on my hands or pick things in a nimble way intraday, or stocks that have been outperforming, which we've been finding a few of those. And but as things have momentum, it's just easier to find what is moving, and kind of like throwing the dart. Anyway, as we go into today, markets are kind of quiet. As I said, they kind of popped up. They're coming in. No damage done over here so far. And here's our major support on the hourly. Here's our minor support on the hourly. And somewhere between here and here is where buyers need to step up again. And as you can see, the smaller time frame, that's not happening. Well, they've begun to happen. And now we've got the potential for a measured move here. Since this initial buying failed, then we look for it to come down into this area here. Let's go 350-ish, 355. This little congestion area right there. Well, somewhere in between here, buyers need to step up and say, hey, we're really here, and we're just comfortable buying on the dips and then pushing it higher. So we'll see how that all plays out. 30-35, 30-35 down here. Yeah, well, trading range. Prior support comes down to prior support. Buyers show up again. That's what they're supposed to do. The deep retracement every time puts that into question. And now they come in force, Paul, and they push it above the highs. So it just reinforces the idea of the self-correcting uptrend, and the majority institutional saying, hey, I'm nervous with this market. It's going up. I want to participate, but I want to get in where if it falls apart, it doesn't hurt so bad. And then it's like, oh, everything's okay. Blast off again. Oh, I better take the money. And it just starts to pull back, start the whole process over and over again. So, this whole market since the move off the low, the initial move off the low into April has been buy the dip, buy the dip, buy the dip. Now things changed. So as things changed here, right, it was like, no, I don't want to buy the dip. I'm confident this is going to go up. And this is what I touched on the letter, the letter over the weekend was they're bullish here. Minor dip being bought. Sideways price action at resistance, that's bullish. It takes out the high. Why the hell is it resting? Okay, whatever. Nervousness, these crazy people in the street rioting, right? That's sick stuff. Maybe who knows what's going to happen? The military go out there and who knows? Anyway, this market just seems to be so filled with uncertainty about something. But you don't need to rest after resting. So, whether it's today or tomorrow, it's getting a little long here for prices to start taking off. And we want to see prices begin to, this is what normally happens as price pattern traders. This is what we look at. We look at patterns and say, okay, this is in a trading range. This was bullish price action. Prices have broken out of that. Price is supposed to now begin to accelerate to the upside because the uncertainty, which is a picture of uncertainty in a trading range, is over. We've cleared that resistance and we've got uncertainty again. So self-correcting uptrend, it's going to be a turner to the upside. Maybe so. I don't know. It is what it is, as I say. You can see the NASDAQ futures here, similar story, with the higher low here and immediately coming back in again. Right? So when prices go sideways at resistance and they break out, they're not supposed to come all the way back in. It's like you've rested already and you want to rest again. So this is not, let's call it a healthy market. If you just had a rest and you started to run and right away you had to stop, well, you're not healthy. Let's just use that analogy that it's coming all the way back in again. So, and then how far does it go? Right? So that's where it stopped and pulled back a little bit and accelerated. The deeper it pulls back here, the more this trend comes into question. Now, from the daily perspective, obviously, this is still in an uptrend. I'm just moved this up to the overnight low, but yesterday's low, any pullback, right, needs to hold in this area because obviously, you get a red bar within the daily trend, right? Let's assume that this turns into a big red bar closing here. The next thought that produces is, oh, it's going to go down. Well, you see here, it went down a little bit. Over here, it went down a little bit and went sideways. So, again, breakout, resting, something's wrong here. YM, similar story, actually showing a little relative strength. It didn't clear these highs, but look how little it's pulling in over here. So this is what it's supposed to do after coming out of a resting period and clearing the highs, where it just pulls back a little bit, and then it's supposed to go back up again. Shallow pullbacks, not deep pullbacks. Russell, right, doing okay. It's at its resistance. So similar to what we were looking at over here, just to reinforce the concept here. Sideways price action at resistance. Doesn't make any difference as to the time frame we're looking at. The concept applies to all time frames. So as we go to the hourly over here, what we'd like to see is some sideways price action here. This is to show some relative strength, absorbing the supply. I touched on this, Dan's chart of the week over the weekend. Go look at those charts, go to the website. And there's a little comment about absorbing the supply. You can get a picture of that. So this going sideways here is supposed to result in a move going up. So maybe the Russell is actually the better market to trade as far as trading the minis, that this could go up to the highs here. It's got a tradable void. Bonds getting weaker. You can see them beginning to, not beginning, they have broken down under these recent lows that have been in place here for several weeks. So as this is breaking down, interest rates are going up. Weekly's in an uptrend, but now we've got a rounding top here, which means it's going to be more difficult when buyers show up, assuming they show up here at the 20 or give or take somewhere in this area. It's going to be more difficult to get above here, because as prices are in a sideways action and go sideways, an uptrend and go sideways, they're supposed to break out, not break down. So now we've got all these buyers that are now holding losses that now say, what happened? It was supposed to go up. It didn't. So if it should come back up here, I'll just take my money. That's why we call that supply or resistance. Looking at mini courses, how long do they run? About an hour, Vanessa. Looking at multiple time frames. I think there's 2 on multiple time frames. You'll love them. For $27, you can't go wrong, believe me. All right. I was just answering on YouTube, greenies. Oil up here a bit, kind of grinding. Right. So this is bullish price action. Red bar ignored. Right. That's what you want to see after a run. Right. A resting period. You want to see it run. Then at resistance, bottoming tail bar, red bar ignore. That's bullish price action. Nonetheless, it's grinding here. Bit of a grind. It's got room to go up. Unfilled gap up here. So until proven otherwise, right, we'll say, well, there's our major support. Here's our minor support right there. And the assumption is it keeps going higher until it doesn't. Gold is kind of churning. Sideways, buyer stepped up on the dip. Stalling up at resistance. Lots of things stalling here. However, we'll look at silver, and then you can see silver playing catch up over there up into resistance. However, the yen looks like could be an opportunity here. Notice this nice hook kind of a pattern here. Looked like it was going to go higher. It did, then come back in again and sideways. Notice the topping tail and now the breakdown. So it doesn't matter what you trade, stocks, ETFs, E-minis, gold, currencies. It's all pictures of what you and I and everybody else is doing, right? Pictures of our beliefs and expectations. And when we believe that prices should go up, it forms patterns like this. Right now, obviously, it's sideways. It's not in an uptrend. But then when they break down, it shakes that confidence. And now over here, it shows us that sellers came in aggressively on the advance where it was sideways, and now it's breaking down, which now produces the thought that it can go lower. Right? So, how do you short the yen? Good morning. You're asking. You trade this futures contract, Debbie. You short the futures contract. Sentiment is bearish, Jake. Breath is bearish. You can see here, breath got to an extreme. Sentiment got to an extreme. It's backing off a little bit here, but in the upper part there. So this is in part, as technical traders using market internals. Look, we can say, hey, it's coronavirus, it's China tariffs. All of those things, of course, play on, traders' thoughts and beliefs and so on in the market. But, looking at the markets the way we do. We look at patterns, we look at intermarket analysis, we look at market internals. So for reasons as to this hesitancy and uncertainty, in part, it is about market internals and sentiment. So we know historically that breadth is up at an extreme here. So how did breadth get to an extreme? Too many stocks participating in the advance. And you say, well, isn't that positive, Greg? Yeah, it is positive. But as too many participate, all the money is flowing into, as you can see right now, the dogs, the junk, which have made some pretty nice moves off of the lows. So you've got too many participating. That doesn't mean any markets have to crash or that kind of, thoughts, but markets need to rest, which it's been sideways resting and minor pullbacks, which we could say is bullish. At some point, so it's going to change, and you just have to be open, right? And not say, oh, long, buy the dips, and then all of a sudden you buy the dip and you get you get smashed. So, money management is the key. Sentiment's at an extreme. Historically, these guys, they get it right once every 10 years. I don't know. I'm just making up stuff at this point, but they're so wrong. That's why so often that we just have to keep an eye on them. So yes, it's a time to be careful, yet the markets, rather than dropping, they grind. They just grind. Are those moving averages on sentiment and breadth? This is not a moving average. This is just simply a McClellan oscillator. This is a 5-period moving average of the closing total put call ratio. And these are envelopes, percentage envelopes that I've looked at over decades, and they adjust for bull and bear markets. That works out real well. I can type in the room where they are if you want to set them up. No, we don't have proprietary indicators, that kind of thing. Happy to share with you how to set that up on your chart. So that's it. All yours, Dan.
All right, thank you. So we actually went from very light inventory to pretty loaded. Let's go through them real quick. On the weekly options trader, we got a mixed bias on the swing ladder. We are 100% bullish. Here we go. AMD. We have a call spread. The 56s right up here, and that's for Friday. So we just need the melting ice cube. Boeing, we have a Condor, which is an out of the money put spread, out of the money call spread. So we wanted to go, we wanted to just bobble around in a trading range in a coma. Costco call spread, we tightened the stop yesterday. Hess, a Condor, and I see some prints up here. We're short the 50-52 and the 46-41. So it looks like the call spread might be taking some heat here today. We'll keep an eye on that, obviously. Netflix, we did a put spread yesterday on the nice reversal here on support in the 50. Hey, Jake, your drop down. Big Jake is still the Boeing. It's still the 146s, I think, or 147s, or 157 rather. It's over this high. And, I mean, when you do condors, unless it works perfectly, when it bobbles in a range, you are going to feel heat on one side or the other, but you're making money on the other side. That's the way they work. All right, Netflix put spread doing great. On Domino's Pizza, we did a put spread under the wide range bar. Echo Alpha put spread. Tesla did a put spread, just an amazing 15-minute strength yesterday. I regret not giving this a directional over 15-minute high, but we did a put spread on the afternoon breakout. Finally, RCL, we did a put spread, and that was also on my list for a directional option trade. I was going to enter it yesterday, and I just decided to wait to today. And once again, you've heard me say over and over, like a broken record, I'm just shocked at the market strength. Last night I saw the SPOOs down 15. And so I was thinking we were going to open down 15. That was a logical interpretation. And then I wake up this morning and we're up 15. I don't get it. I don't get it. And it's funny how the news, if we were down 15, you know, with 100% certainty, the headlines would be market down on increasing riots. But since now even the media, nobody can point to a reason, they just have to say markets are up despite riots. Like, you know, there's no, they don't know what to say because they got to fill in the blank. That's what the media does. Like Joe Kernan said something funny this morning about the news. He said, he said the media doesn't report on a house that's not burning down, right? There's no news event there. So they report on, you know, on shock value stuff. And then in the journal today, there was the CBO, the Congressional Budget Office is predicting it's going to take 10 years for the GDP to get to recover. But the Qs have negated the, you know, the bear collapse from this gap down. I don't get it. You know, L. Alarian was on TV, CNBC. I like listening to him, and he was, you know, all he could point to is the Fed put. The Fed put is, you know, people are risk on. Fed has my back. Liquidity. They're going to buy everything. Put a floor under the market. So who cares? Who cares? Just buy. That we don't do that. We're price patterns, and as you can tell, let me look at the swings here. We got 9 longs, so yes, we will trade compelling patterns, but with 1 foot out the door because of the internals. YouTube's asking about Zoom. It's I don't know what to tell you. It has earnings tomorrow. Negated this little retracement uptrend here, 2050, 200. It's a beast. If it were gapping up on earnings and gapping up here to 212, which is $10, $8, I would be thinking earnings were yesterday. I just looked on Yahoo 30 minutes ago and it said June 3rd. See, so now we have 3 different answers. Yesterday, today, tomorrow. I'm telling you, Yahoo said 6.3. That's all I can tell you. But I got nothing to do here. You know, surely wouldn't be buying it. I'm hoping it gaps up another $20 and then we'll sell a call spread on it. All right, let me look at opens real quick on the swing letter. APD, we bought stock. Car, we bought stock. That was another beautiful setup, daily, weekly. And I sent out a text saying if you did not have the covered call to sell some more at 26 pre-market, that's a 15% jump overnight. We sell into that. Circus de Olay. I also said to sell some pre-market. Beautiful, beautiful trade. It's just beautiful. Just no-brainer 1, 2, 3 setups here on the 15-minute chart. That's an igniting bar, price void, daily in alignment. These were no-brainer setups. Delta, we did a directional. I sold some naked puts. GoDaddy, we're long. Neo, we're long. Pro, long, looks fantastic. That's a 1, 2, 3, 4. Looks great. SPGI, bought stock, and finally WCN. Another no-brainer 1, 2, 3. So our portfolio is doing fine. We'll keep an eye on that Hess Condor and also Boeing. Let's look at some gappers here. 64.40. It's in a trading range. So now it's gapping right to the middle of the range here. Let's see what it does in the first few minutes, but this is a candidate for either a call spread or a condor. And when it's gapping to the middle and you have multiple resistance, multiple support, that's a condor setup. But we don't just do it at the open. We got to see what it feels like doing. Golf Hotel 83, bearish gap. That's a call spread candidate. Marriott, this was on our list over last week's high, but with a deep retracement, I canceled it. I still want to keep an eye on these beat up sectors that we've been trading. The hotels, airlines, cruise ships, restaurants. But yeah, the paper was saying, you know, just down the street here where I live, Las Olas, you know, we have a curfew and now these restaurants are having a hard enough time getting people in with all the new rules, limitations, confidence. So now this is thrown at them. Now they got to close up the restaurant at 9. They're just shaking their heads saying, come on, how do you expect me to survive there? So I still see a lot of small businesses going out of business. Let's see, Tim on YouTube is asking about AAXN. But why not buy Zoom with such a large igniting bar? Let's go back and look at both of those. AAXN, yeah, Greg was, I remember Greg yesterday on this pullback was nibbling on it right in here somewhere. It was on my gap list yesterday, but I didn't like the fact that it was here. Now it's gapping up and coming in. I don't know. It's just, you know, it has to be your pitch, your setup, and that's not one for me for a swing. Zulu Sierra. Yeah, we mentioned this Friday. We mentioned how strong this 15-minute chart was Friday, went up, would not fall. So, you know, your trading plan is show me a pattern. What time frame am I trading? What is the name of the pattern? Where's my entry? Where's my stop? And now something that's run from 75 bucks to 110. That ain't on my pattern. I like I said, it's excessive. I'm wanting to short a call spread on this thing. Let's continue. Yum, it's a beat up restaurant we're watching. IHG, it's a hotel. EEFT, there's not good volume there, but McGraw, let's watch this for a put spread. I love bottoming patterns, multi-month consolidation, and then when the 20 and 50 curl together like this, and then you got a breakout on the daily and the weekly, that's a bottoming pattern I like. Now again, compare this, overlay it with the S&P or the Qs, and it's lagging. I get that, but we're just talking about a put spread. Daku here. All right, so here's another one. It's all-time highs. It's extended daily, weekly, monthly. The 15 is still strong. But do you think I would swing this after a rally from 120 to 150 in 4 days? Absolutely not. If you were in it, I'd just be in trail mode. All right, there's our Hess. I decided to look at whiskey again just because of I saw Restoration Hardware here ripping to the upside. Look at these runs. Just unbelievable runs in so many things here. From March to now, this thing was 80 bucks and now it's trading at 234. But there's no pattern there again. I tell to anyone, tell me what to do with this thing. I have no idea. So I move on. But I did want to look at whiskey. I like this small little breakdown failure here. It's a buy setup on the weekly. It's resting. It's been on a tear, but it's resting. So McGraw, let's keep an eye on this for a put spread. There's the Zoom we talked about. Work. This one, darn it, was on our list yesterday to buy as a pre-earnings run, and I didn't. Yum or yum, yum. I didn't want to chase it because of the gap, but it worked nicely. NGL. Now, whoever was asking me on YouTube about igniting, I'm not saying this one because of the gap down, but we like igniting bars from consolidation. All right, we're Qs are the weakest here. Let's just chill on all new positions. Keep an eye on our open inventory. I'm glancing. I tighten the here. I tighten the stop on car. Let me give it to you all. Gave car and Circus Olay. These were adjustments I sent already to our swing subscribers. All right, so NGL doing nothing with the gap down. So Alex said he's buying Yum. I would. It is. That's a bullish gap and it's a bullish pattern. But just for me. For me. All right, Hess is moving up here. So, but for me, I would wait for the market to stabilize a little bit. And I, as a general rule, don't trade in the first 5 minutes. Everything's risk to reward. But Yum, yeah, Yum looks good. It's a breakout, inverse head and shoulders. All right, not like, ooh, Hess is a directional now. Not liking this at all. So let's use a 5-minute high on our call spread. I mean, on call spread, sorry. But this looks fantastic now as a directional. Let's actually buy 5-minute high. Well,